Hydrogen is being touted as one of the long-term alternatives to burning fossil fuels to drive our lives. Where does it sit in the big picture? And we're all told to burn less petrol, gas and oil. But is it the real alternative we're looking for? Well, we're joined now by Richard Hulf, co-founder and fund manager of the HydrogenOne Capital Growth Plc, the LSE's first listed hydrogen fund under the ticker HGen. Richard, welcome. It's a pleasure to be able to catch up with you. I know very little about hydrogen, so I wanted to start with some really basic questions. Why hydrogen? What is it about hydrogen that we should be so interested in?
Well, the starting point is the chemical symbol, H2. There's no carbon, so it's a zero carbon fuel, and it's not just a fuel that we can use to combust. It's more of a carrier of energy. That really helps the sort of the green hydrogen, the green energy sector that we've got from wind and solar. It solves the intermittency of that. We can make it in a much greener method than we are at the moment. It's not the panacea. It's not the end solution, but it's an absolute necessity in the harder to decarbonize parts of our industry.
How do we source hydrogen, the form of hydrogen that is of any use, to look at making it a renewable resource that we can begin to power our lives?
Well, it's currently is a 90 million ton a year market. It's worth about 500 billion, which is what this fund is going after initially. But it's really in the industrial sector where we're using hydrogen. We're using hydrogen at the moment for the manufacture of fertilizers. We're using it for making cement, for making steel. We're using it in desulfurization in oil refineries. So it's already a very big sector. But the current method of making hydrogen is very polluting. We're heating up steam with methane, and we're cracking the methane into the hydrogen, and that's called steam methane reforming, or SMR. Industry knows that can't go on, so there's a race to replace all of that grey hydrogen with green hydrogen, and that's simply done by splitting water, H2O, into hydrogen and oxygen. So that's what green hydrogen is, and that's what this fund is looking to develop.
Just one other quick question about hydrogen. If you do a Google search on this and you talk about renewables, it talks about fuel cell technology, driving cars and things. Now, as a consumer, I'm always looking at better and cheaper and efficient and more efficient ways of driving vehicles. And renewables is a really interesting area to get involved with. In all honesty, is this something that we should be looking at and spending a lot of research money on at the moment, trying to find a fuel cell that we can carry around in the car realistically? Do you think it is a realistic alternative to petrol?
It's a realistic alternative to diesel. I wouldn't say petrol, because we absolutely have to stay with batteries for a mobility of small cars, which is most of the mobility and transportation sector. But when you start to get to the higher end of mobility, and you start looking at HGVs, large trucks, trains, aircraft, the weight to power ratio of batteries just doesn't allow you, and the range of batteries for some of these long distances that trucks are traveling just doesn't work. So that's where hydrogen is starting to come along. It would be a mischaracterization of hydrogen to say that it's going to replace petrol. It's not. It's probably more like to replace diesel at the high end, heavy duty, long distance, because there isn't really an alternative, and that's what we've got to go with.
Is it still expensive to produce hydrogen in a form that is available for us to do all the things you say within industry? You say it's quite a dirty process. Is it expensive?
No, it's not expensive, and it's going to get cheaper. Really, because of scale. If you only had one oil field in the whole world, the cost of that oil would be absolutely huge. So hydrogen is sort of at that very early stage. But once we've got lots of hydrogen being produced and lots of electrolyzers being produced, the way that we make green hydrogen, it's going to get much cheaper. We've sort of been labouring under the illusion for the last kind of 10 years that oil was very cheap, but that was because of certain political activities of OPEC and others. overproducing oil. So the world kind of got used to a $40 a barrel oil price. Now oil has sort of gone back to the economic level at which most people can produce it, around sort of $80 to $100 a barrel. You're getting a fair comparison of making the comparison would be grey hydrogen made from natural gas, which a couple of years ago natural gas was infeasibly cheap. Now it's gone back to the sort of level, not the current spike, but around the sort of like an $80 a barrel oil equivalent of gas. That you've got the price of green hydrogen and grey hydrogen pretty much on par, and that number is about $5 per kilo to produce grey and green hydrogen. So it's there now. It's not costing any more, and it's going to get cheaper. So we need to get the cost of green hydrogen down to about $1 to $2 per kilo. But as more electrolyzers get made and more people use hydrogen, that's where it's going to go. So we're already starting to solve that problem.
Yeah, let's take a look now in some more detail about this fund that you have co-founded, the HydrogenOne Capital Growth Plc. If you look at a chart, I mean, we go back to July 2021 when it was listed at £1. Currently trading at 88 pence. I think this is around about 100 plus million market cap at the moment. What are the aims of the fund? What were you setting out to achieve?
Well, what we're trying to do is it's basically private capital. So it's taking listed capital, and we're investing into private companies that make electrolyzers, that make fuel cells, that make hydrogen pipes, hydrogen transmission and storage, and we're starting to invest into hydrogen projects, very similar to an oil and gas project, where you assemble electrolyzers, not an oil rig or an oil platform. You don't drill any wells. You get access to water, you get green electricity, and you split the water into hydrogen and oxygen. So we're starting to invest into private companies that do the engineering and the project development of both. And it's a very long-term play. So we would typically hold our companies for between sort of 2 and 5 years. And the way that we're getting a return for investor is by investing £1 into a company or a project and selling it in a few years' time for £4 or £5, and then recycling that capital back into the industry. So it's sort of like what you might call an evergreen fund. It will just keep going, keep recycling that capital back into hydrogen companies and projects as they grow. And we've got first mover advantage in investing into some of the best companies and projects in the world. And we're now being followed by better known funds like the Amazon fund and others. So we're investing alongside big industry, long-term strategic players. So it's a long-term play, generating returns of 15 to 25% is what we're targeting.
So what's your background that enables you to offer this as an opportunity, which should, in theory, as you just said, give 10 to 15% growth at these sort of levels? What's your background?
Well, it's me and JJ Traynor who set this fund up. We both come from the oil and gas sector, but mostly in investment. So I originally started in Exxon years ago. And then went into the city working in corporate finance and fund management. My last job was with Artemis, running the energy portfolio over there. JJ was previously at Shell, running their investor relations operations. But we both worked on big projects in the oil and gas sector. We're now starting to work on big projects in the hydrogen sector, where the level of risk is much lower. We don't have geological risk that we used to have to deal with constantly in the oil and gas sector. And we've got a tailwind of supportive government policy around the world to get this sector sort of kicked off. So it's that skill set of understanding the underlying industry and having experience in capital markets, being able to manage assets to generate returns for investors. So that's our background. We've also got a team. There's a full-time team of 6 of us. We've got people with private equity, fund management experience, valuations experience, and external relations, and PR is very important in this sector to spread the word about what we're doing. So we've got a very excellent team of people working with us. But basically, it's fund experience, industry experience, and markets experience that's all brought together under HydrogenOne.
Yeah, it certainly seems like it's very widely spread, which gives you the, as I said, the authority, if that's the right way of putting it, to do this. What's the shape of the portfolio? To what degree are you investing in off-market companies, and do you have any listed businesses within the portfolio?
We've got 9 private investments we've made since kicking the fund off in July last year. Most of the 7 of those are companies. They're industrial businesses, manufacturers of fuel cells, electrolyzers, hydrogen storage. So we've got companies like Sunfire in Germany, big electrolyzer manufacturer, would be selling electrolyzers sort of grid scale to people like global utilities who are buying that product. We've got investments into fuel cells, which is the other end of the electrolyzer. So you split water, you make green hydrogen with an electrolyzer. If you reverse the process in an electrolyzer, you get a fuel cell. So you put hydrogen into a fuel cell, you get electricity at the other side. So that's how you're using fuel cells as an alternative to batteries, to power motors. So we're investing into the companies that make things. And we've done this sort of thing before in the oil and gas sector. We understand how private companies work, how you set milestones for these businesses, how you manage risk, how you assess management. The other thing we're starting to do is the other 2 companies in that 9-company portfolio are hydrogen producers. So these companies, one is called Gen2 in Norway, one's called HH2E in Germany. So the hydrogen market is a global market, and we're investing globally. And Europe is particularly ahead in this area, which is hence those 2 investments. So those are top company owns separate projects that are owned in their own special purpose vehicles, or SPVs in market terms. And we have the rights to invest capital into the projects themselves, being an owner of the company at the top. So over the next few years, the fund is around about 100 million now. We expect to grow to sort of 500 million within the next couple of years, and then 1 billion within 5 years, fueled by the rapid growth of real projects in the hydrogen sector, and growing size and scale of the companies that are participating.
Do you carry much cash on the balance sheet, or are you fully invested?
The cash that's left is what hasn't been invested, but we're almost fully invested at the moment. We're 85% invested on the original 130 million pound raise. So that gives you an idea of the cash that's available. And we need to constantly raise funds, as we've already indicated to the market that we'll be doing more fundraising on the London Stock Exchange, to allow us to carry on investing into a very attractive pipeline of over 500 million worth of companies that are both manufacturers and project developers. So the pipeline is very real. Projects are starting up sooner. There are more of them. They're better quality. We're investing alongside some of the biggest industrial players in the world, people like Centrica, like the Amazon fund that I mentioned, like some of the oil traders like Vitol and others. So this is a sector of big name participants, and we're very pleased to be advancing our investors' capital into this fast growing space.
How easy is it at the moment to raise money? We've been hearing a lot, of course, about some of the frailties of the financial system broadly here in the UK and, of course, abroad. How difficult is it to engage with those that want to lend money into these sort of projects?
Well, we're past that now. The hardest time to raise money was when we first listed the fund. And thanks to Pamela Gordon, for our broker, for getting us over the line to get over 100 million on our first fundraise. That was the hardest time. Now that we've started to invest into companies, investors can see what these companies do, what these projects are capable of. So on the ground, the fundamentals are getting more and more attractive every day. And we started off with great support from the retail sector. but now we're getting additional support from the institutional sector as well, because institutions need to see results, and we totally understand that. So we're demonstrating the results that our companies are delivering, and the quality of our investment and our eye for a good investment. So it's starting to get easier. Of course, we're up against the realities of our current market, but we're a robust fund. We're in this for the long term, and when markets start to recover and we start to get a more of a risk-on environment, then our existing shareholder base and others will start to move back into this sector. We're looking at years in terms of this fund, decades. Yeah, we've got some short-term headwinds with markets, but we expect to overcome that within the next few months.
What's your investment pipeline looking like? Where do you see the fund going in the, I won't say the immediate future, but certainly in the sort of the midterm, the next year or so?
Well, at the moment, we've got a short list of about 15 companies that we're under a non-disclosure agreement with, under NDA. We're currently engaged with 2 companies where we're negotiating shareholder agreements. So the pipeline, I mean, we could probably invest about £200 million a year, based on our current run rate of closing about a deal a month. And these are high quality companies and projects, and they're getting better and they're getting bigger. So it will be important for us to raise more capital, to keep our investment amounts that are currently between sort of 5 and 25 million euros is what we would put into companies. That investment amount is going to raise up to sort of 20 to 50 million over the next couple of years as the opportunities get better and better. But it's a very real pipeline, and the more that we participate, the more the opportunity set grows. We've invested alongside Foresight in one of our companies, HH2E, the project company in Germany. People like Foresight like the fact that we are hydrogen concentrated talent and market exposure. So all the insights we have to who are the best electrolyzer firms to use, who are the best contractors and project developers, that's all we do. All we do is hydrogen 100%. And so we're becoming very attractive strategic partners to other bigger, larger investors. And that's really what's driving the pipeline at the moment. But yeah, you're probably looking at least 10 to 15 deals a year, and the pipeline is adequately stocked with a round about 50 good players at the moment.
Just one final question. I noticed actually from your accounts you report in sterling. This drop in sterling we've seen recently, how would you describe that from what you're trying to achieve with the fund, the difficulties that you're facing now because of this?
Yeah. Well, something that's vital to shareholders is the valuation of the private portfolio, because it's not listed. Obviously, there's not a market to market gain. So we're deploying very complex and discounted cash flow methods that are overseen by our AFIM and overseen by the fund accountant KPMG. A very important part of what we're doing in those calculations is the discount rate, which is calculated from scratch, but includes the risk-free rate, of course, which to your point around sterling and our interest rates in the UK on the 5-year and the 10-year gilts, that has changed. But it's a global fund, so the discount rate we calculate for each company in different countries, it includes the risk-free rate for that country. So we invest into Norway or America or France or Italy, we'll use the risk-free rate from that local market. So we're not completely beholden to UK markets, but that's only one part of the calculation. So that's that direct answer to your question. That's how we're affected by sterling. But then the DCF is the basis of everything we do. But then we also triangulate the valuation against listed markets, and to a lesser extent, but it's a sort of like a blend, but mostly from the DCF method. So it's really that discount rate that is has an effect on us.
Very complicated, it certainly sounds like, but obviously as a fund manager, you do all the heavy lifting for investors who want to take advantage. But no, Richard, it's a pleasure to catch up with you. Thanks indeed for
Thank
joining
you.
us. It's great
Thank you
to
very
have an
much.
insight into hydrogen. That was Richard Hulf. He's co-founder and fund manager of the HydrogenOne Capital Growth Plc, the LSE's first listed hydrogen fund under the ticker HGen. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.